So Snehi, first up, let's get started with the international handover. What does it look like to you?
Well, it's really bad. I mean, like a very negative day coming from Wall Street today. At least Wall Street is coming off a losing session for the major benchmarks after sticky inflation data from last week, as well as some strong economic data had investors concerned that the Fed Reserve will take longer to cut interest rates. Treasury yields spiked with the rate on the 10-year note touching its highest level since November. Oil prices also rose to 5-month highs. On Tuesday, the 30 stock Dow dropped nearly 400 points intraday, or a whole 1%. S&P 500 also lost 0.7%. Nasdaq also tumbled nearly 1%. So, sharp cuts coming in for the US markets. Still, some market observers remain optimistic about the overall equity market, saying stocks are due for some consolidation after quite the strong start to the year. The S&P 500 is coming off its best first quarter since 2019, and while today investors will also get more insight into the labor market with the ADP private payrolls report, which comes ahead of the March reports data. Remember, that is due on Friday. Now, the ISM services index is set to release after a market open today, according to US times, of course. And Fed Reserve Chair Jerome Powell is also set to speak, as is a slew of other central bank speakers, including Governors Michelle Bowman and Adriana Kugler. Chicago Fed President Austin Goolsbee and Fed Vice Chair for Supervision Michael Barr will also be speaking at events. On the earnings front, then Levi Strauss will be reporting after the closing as well. So, while some sharp cuts coming in from the US market, but with that, let's also take a look at what's happening across the European markets. And it's just mirroring what Wall Street has done. Sharp cuts coming in across European markets as well. DAX down more than 1.1%, FTSE down 0.2%, and the overall stock 600 also down 0.8%. So, while rather negative handover coming in from international markets, Shreyansi, let's see how that pans out for us. But with that, also take us through what gold has done, what oil has done, because on one side equities are down, but I'm sure both of these, commodities are up and away.
Absolutely up. And up and away is an understatement right now when
Absolutely.
I'm looking at gold and oil. So starting off with gold then, gold scaled yet another record peak. And that was as traders snapped up the safe haven asset amid growing Middle East tensions. Now, largely ignoring a stronger dollar and tempered bets for US rate cuts, the mix of bullish tailwinds has driven bullion nearly 10% higher so far this year, and those are the kind of moves that we've seen coming in for gold on a daily basis and also on a yearly basis. But when I'm looking at oil, then oil prices extended gains on Wednesday, and that was as a larger than expected fall in US crude inventories, as well as escalating geopolitical tensions raised investor worries about tighter supplies. So when I'm looking at Brent futures, there's a rise coming in of about 0.2%, and they hovered around the $89 per barrel mark. Now, when I'm looking at US WTI as well, that contract also was doing pretty well, and it was also up 0.2%, around that $85 a barrel mark. Both Brent and WTI had climbed to its highest since October on the previous day. So those are the kind of moves that we've seen coming in for this particular commodity. Now, in fact, let's